These videos are for educational and informational purposes only, and you should review our risk disclaimers found in our terms of use. That link is on the screen. Do you ever wonder how traders capitalize on those rapid price movements that you see? Well, today we're going to look at a pretty powerful strategy. It provides a roadmap to profit from trending markets, and it's called the moving momentum strategy. Now, this strategy is going to assist you in capitalizing on some really good price movement. We're going to use moving averages, a stochastic oscillator, and a MACD-Histogram. And it's a really great strategy because it does provide a structured framework for making trades. So in the long trading strategy, the focus is on identifying and profiting from uptrends in the market. To do that, we're going to use key indicators, and this is going to be the 20-period SMA, and that has to be above the 150-period SMA. The slow stochastic, that falls below 20. The MACD-Histogram moves above 0. So these indicators are going to confirm a bullish bias and is going to signal potential buying opportunities. So when that 20-period SMA is above the 150-period SMA, it indicates an uptrend. That's a favorable scenario for entering a long trade. And once that histogram becomes positive, you look to enter the trade. The histogram is already positive, then just set an order above the most recent candle high. The short trading strategy looks to identify from downtrends. We're going to use the same indicators, 20-period SMA, and this is going to be below the 150-period SMA. The slow stochastic rises above 80, and the MACD histogram will then move below 0. This indicates a bearish bias. So when the slow stochastic rises above 80, it suggests a bounce in the market. That gives you an opportunity to enter a short trade on a reversal. To implement it, you take a bearish or bullish position based on the signals provided, set your stop loss orders to manage risk. So once the histogram becomes negative, you look to enter the trade short. Again, if it's already negative, look to set an order below the most recent candle low to get triggered into a short. But we also want to keep in mind external factors, market conditions, news events. So for successful trade execution, we do not want to trade this in a range-bound market. It's going to have a tough time delivering successful trades. So let's take a look at an example here to help you understand this a bit better. So it's a bullish trend like FEDX here. The moving momentum strategies indicator, they're all aligned. Gives you a clear basis for entering a long trade. So in this trade example, FEDX is giving a clear bullish price action trend. So we're just going to shift over to the strategy. We see the 20 period rising above the 150 indicates an uptrend. The slow stochastic falls below 20 suggests a pullback. We can see a pullback take place in price. And once that histogram moved above 0, signals a potential long trading opportunity. You can enter at the close of the candle, set an order above the high. That's only going to trigger if that price continues to the upside. So these indicators all aligned, provided a solid base for entering a long trade in FEDX. If you follow this strategy, you would have capitalized on the corrective move within the overall uptrend, and then we're going to see some profitable results. Now, it depends, of course, on your take profit strategy. This is a failed long trade. This is overstock. So it's clear that considering the price movement alongside the indicators, it's pretty important for making trading decisions. So the strategy identified a bullish crossover of the averages, the 20 period rising above the 150, telling us only buy triggers are on. So despite this bullish signal, the price action prevented a successful trade because price just tanked to the downside. Now, you can tweak this, customize the moving momentum strategy. You can adjust the parameters. You can make the averages longer, shorter. You can change the stochastic oscillator settings. Maybe you go 60-40, 70-30. It's up to you. And you could change the MACD histogram configurations. You can change anything you want. Just make sure you test it. But first, experiment with these settings. Help find the balance between the sensitivity and the reliability of signals to improve their performance. Now, setting profit targets and stop loss orders, absolutely essential for effective risk management. Your profit targets, set them unique to your style. Consider using multiple risk amounts. So you can set your stop loss via ATR readings. So 1 ATR or 2 ATR. Or use the swing high-low after trade entry. But to start out, keep it really simple. Consider using 1 to 3 times your risk for your profits and just learn how to manage your trades as they move in your direction. With experience, consider just using trailing stops, especially if this is a young, new trend that you're getting into. So this strategy gives you a structured approach in trading trending markets. So you have to adapt this strategy, though, to your individual needs and your trading preferences for better results. Thanks for watching this. Hit like, hit subscribe, and we'll see you in the next video.